I want to get through a bunch of stuff, and I like to build in time for questions. So my name is Davie. I'm the managing director of kind of technology and financial inclusion at Kiva, and I'll talk about Kiva in a minute, but specifically I kind of run the think tank inside of Kiva that says, hey, we've worked for 13 years in the developing world, and let's take a look at how can we use new and emerging technologies to multiply the impact of that. Today I'll talk about DLT, you guys all know about that, but I'm going to talk specifically about how I think this is a systems change scenario for the world's unbanked for 1.7 billion people. So for those who know Kiva, you probably know this type of story. For those who don't, I want to make sure you get some context. So Kiva's been around for the past 13 years. It was started by a bunch of folks out of PayPal who, after PayPal got bought by eBay before it became PayPal again, they said, hey, what would it look like if we built PayPal where there's no technology? Like, what would it look like to take this cool thing that's happening in technology, and again, zoom back, this is 13 years ago, this is 2005. How could we use the type of thing that PayPal's doing in the first world to bring impact to the third world? And really what they came up with was the concept of Kiva, which is a marketplace where people like us can crowdfund microloans that can then be dispersed to unbanked customers, to people who have zero access, usually zero access to electricity and to obviously internet, but definitely zero access to financial services. There's no bank branch they could go to. There's no mobile money provider for them. And what we do, I love this photo. This came from this holiday. Between Thanksgiving and now, we started running our holiday campaigns, and hope is a big theme. But really what we like to think that we do and what we actually do is we enable people to provide hope for people who might otherwise not have it. And the specific case in this woman here, this is not just some stock art. This is a Kiva borrower. And she literally needed a bike so that she could grow her delivery business where she delivers food goods. So she, instead of just running a storefront, she actually wants to deliver to people's homes for elderly and sick and people who cannot get out to the market. So that's for those of you who don't know Kiva. For those who do and for those who don't, this is what it looks like. We have over 2.5 million borrowers, and I'm going to talk about stats in a minute. But you can go through and you can filter down to any type of impact you want to have. Do you want to fund refugees? Would you like to fund refugee women? Would you like to fund refugee women who are single mothers, specifically just in Jordan, who have fled Syria? You can basically get as narrow an impact as you want to focus on for your charity, and you can fund a loan for this person. So you can see, you can lend $25. She's down here in the bottom. She's trying to raise, she has $500 to go, so it looks like she was trying to raise like $800. And once that loan gets funded, Kiva does the entire front end, and then we partner for the back end. So we literally, it looks like a tech company, and the front end is. We crowdfund these loans. And I'm going to talk about the analog world in a minute, and I know I keep putting off talking about some of these things. The back end of this then is we partner with over 500 institutions in 85 plus countries to actually physically, in most cases, it is somebody getting on a scooter with a wad of cash and a notebook going out to a village to actually fill the end of this. So somebody who works for a microfinance institution that's one of Kiva's partners actually went out in the field and got her story and got her photos and got her consent, did everything right, but brought her basically, did all of the infrastructure to bring her to the digital world so that she can be reached by someone like me who wants to fund a loan for her. And I actually helped fund her loan. This is what it actually looks like. So when we talk about microfinance, this is a bunch of loans happening right now. So the woman on the right side over here in the red shirt, she's actually an MFI, a microfinance institution agent. She works for one called BRAC, which is in a bunch of countries. She, in the morning, got on a scooter from whatever capital city. They work in like 15 countries, so I'm not sure exactly which one this is. She drives out to a village. In that village, she knows everybody because she grew up in that village. Usually they hire agents that are from that area. And so the form of identity she has, she does an identity origination out there, but literally the way we find out who is she knows these people. She's been going out there once a week for the past 10 years, helping lend money out and collect repayments. Everybody else in this room is someone who is either taking out a loan or repaying a loan in cash. And the data that's recorded out there is in that black notebook on the table. So when we talk about a ledger and a distributed ledger, this is what it looks like right now in the developing world, is that each of these distributed people has a physical paper ledger. And best case scenario is that the data from that ledger gets back to some type of proprietary database. And so this was the big aha moment for us at Kiva, 13 years, $1.3 billion in 85 countries, was this or some version of this happens and identity is re-originated and credit files are rebuilt from scratch every time one of these rooms gets assembled with people in it. That every time it's built, they're trying to figure out who are the people in the room. They're trying to figure out, can I verify that that's that person? Again, right now it's just on the agent who knows these people. And then they're recording data into a paper ledger that if these same people got in a room tomorrow with a different MFI agent, it would be a different identity and a totally separate credit history that doesn't tie together. And the reason we care about that as Kiva, and the reason that we're trying to help solve this problem that I'm going to talk about in a minute, is the way the data flows today is a blocker for us and for others like us to deploy more capital to the unbanked world. It's a blocker because we're trying to price risk. We're trying to figure out what's the chance this person is going to default, and should we ask somebody in the US or in Europe to fund their loan? Right now, we only get a narrow snapshot of that data because these notebooks, again, even if they get reported back, each organization only sees their notebook. They don't see the conglomeration of all the notebooks. So, here's how we got to defining the problem the way we did, and I'm gonna talk through the 5 steps. There's a couple things we've seen over the 13 years at Kiva. The first one is a truly global problem. We've operated in 85 countries, so we're not going to build a solution, that is proprietary and only works for one scenario. We looked across and said, what are the systemic problems that are blocking us and others like us from bringing more financial services to the unbanked populations? The second one was the real existing infrastructure. So unlike what my conception was coming into this problem at the beginning of like, oh, there is no infrastructure there, you actually see we have 500 plus financial partners, microfinance institutions and small neobanks that we work with to do that last mile delivery of capital and collecting the data. There is already infrastructure. There's more than 10,000 microfinance institutions around the world that today are serving these unbanked customers. So you don't need to start from scratch. You need to find a way to leverage their operations to hopefully skip a couple generations of technology. And then the third finding that we started from is, at the rate they're being lent today, these people are overly creditworthy. So across the last 13 years, with $1.3 billion of lend, we have, it's actually a 3.1%, it's a 96.9% repayment rate. But for context, US home loans in Q1 of 2018, so in an outstanding economy, we're at 3.5% were delinquent in Q1. So when we're talking about giving loans to Syrian refugees in Jordan, and a lot of these defaults are Iraq became a war zone and literally we just forgave a bunch of loans and wrote them off, that's included in this. These people are highly, highly creditworthy, and it's mostly because they're underserved in terms of credit. At some point, defaults would go up, but it was a neat finding now to say, look, at the levels they're at now, there is a lot of headroom because there is a very low delinquency rate. We get 3% defaults, their cost of capital is 35%. It does not cost 32% to get on a scooter and drive the cash out and actually run the process of banking these people. And then the final aha we had, before I'll start talking about our solution or the solutions that we see as interesting, is 2.5 million people, back on this slide, $1.3 billion, 2.5 million people. I wouldn't undo that impact for anything, and we're continuing to push down that path. But we do have the self-awareness to recognize that today there's 1.7 billion adults. That's 31% of the world's adult population do not have access to a financial account. That means they operate in cash only. Like, I'll give you some fundamental things of what that's like, but this is not like, this does not include people who have a mobile money account. This is no access to any financial product or service outside of these informal cash-based economies. So think about trying to manage recurring payments. You're trying to send your kids to school. It doesn't cost a lot, it costs $50 a year maybe, but you make $300 a year. How are you gonna make monthly payments when you're trying to store in cash? How are you gonna start a business when you need some form of leverage, when you operate only in cash, when credit is not available to you? That's like directly where Kiva has been working the last 13 years. How do you deal with a financial shock? Like, what happens if the wage earner in your household gets sick? You're only operating in cash. How do you send money to friends and family? Like, you're literally using a courier who carries your envelope of cash and hoping they don't swipe it. And for these people, Kiva and everybody in the ecosystem, we're going to continue to have impact, but without a systems change, we will never be able to serve this 1.7 billion people. And again, financial inclusion is one of the primary things that allows people to escape poverty. Without access to the financial sector, it's incredibly hard to get a better education, to get a better health outcome. You can just run down the list. You don't have insurance. And so this is what we came down to. Here's the 5 steps and this is again across our 85 countries and our 1.3 billion lent, these are 5 things that are systemic problems for those who are unbanked. The first 2 really is about access to the banking system. And like 15, 20 years ago, I would have been talking to you about like, you know what, you're right, it's too expensive to go build bank branches for a village where there's only 200 people. Like, I get why they're not going to be systemically included. Fortunately, today we're talking about internet service and access to a smartphone or a feature phone to be able to get basic financial products and services. And we look at those first 2 and say, those are a solved problem by 2030. That if you look at the penetration rate and if you've spent any time on the ground in the developing world, it's amazing to see how many smartphones are out there in areas where you didn't even think there would be cell coverage. The next 2 really are about compliance and enabling flow of funds. I'm going to skip those and come back to those in a sec. Really, it comes down to if you could reach them with the banking sector with 1 and 2, with device access and internet service, you should be able to flow the funds to them. Then it's about getting enough capital applied to this 1.7 billion people. And we're talking about $1 trillion for sub-Saharan Africa and another $1 trillion a year of capital needed for Southeast Asia and the Pacific Islands. And what's blocking that is literally being able to do what every bank does today. My money's with Bank of America. If I wanted Bank of America to make a loan to a customer in Sierra Leone for me, as an example, I would go to them and say, hey guys, I want you to loan $1,000 to this person. And they would look at me and say, Matt, I would love to do that, but I am not allowed to do that. It would be illegal. I will lose my banking license as Bank of America if I do that. And it comes down to numbers 3 and 4. The identity that I'm using with Kiva works fine for Kiva, excuse me, and works fine for me as someone who's thinking about Kiva as charity. But for Bank of America, they have to pass a know your customer compliance check. And that is not a bad thing. That's what keeps you from accidentally making a loan to a terrorist or accidentally making a loan to someone who's trying to scam you, is that these financial institutions that are regulated need to pass a know your customer test. And so their level of trust and identity necessary is much higher than what is needed at the base of the pyramid when you're just deploying charity. The second one is they would say, Matt, I don't know how to price this risk. And not only my compliance for having to know my customer, but my fiduciary duty to you, Matt, is to make sure that I don't lose your money accidentally, that I can specify the risk. And they would look and say, it's great that Kiva has this credit file, but I know this is not a complete credit file. I know that I could not stand up in court and defend that this was a responsible lend for me to allow my client to do. If we can solve for numbers 3 and 4, again, 1 and 2 we see as solved problems, whether it's Elon Musk with Starlink, whether it's Google or Facebook with Project Lunar, Internet.org, there's plenty of reasons that device and internet service are going to get to be near ubiquitous by 2030. If we can solve, not just Kiva, like if the community of people who wants to help bank 1.7 billion people can provide a systemic solution for identity and credit history, all that's left is then banks to be greedy. If right now the default rate is 3% and it's currently 35% credit rates, that means there's 32% yield there. Take out 10% for the cost to develop capital. There's 22% yield there. That yield exists nowhere. And what you should see, and it'll start as a trickle but turn into a flood, is a flood of capital to the unbanked world, not because people like me or a lot of us in the room say this is the right thing to do and we should do this, and whether it's personal charity or corporate social responsibility. You'll see it go there because the existing machine that these banks use to figure out where to deploy capital tells them to deploy capital here. And the reason I care about that, the only place on the planet where these trillions of dollars exist that could be applied for financial products and services is inside of that regulated financial services market. If we cannot make it compatible with Bank of America and HSBC and Deutsche Bank, we will never be able to serve as many people as we need to serve. So, this is what someone's data profile in the unbanked world, best case scenario, going back to that black physical ledger that the woman had in the room where she was collecting data. Best case, it makes it back into her ERP or MIS database, and it's stored there. And that's great. At least now there is some digital data about these customers. The problem, none of this data is compatible. And I put these specifically in these buckets because I wanted to start from the base of the pyramid as a refugee, someone fleeing Syria, showing up in Jordan as a refugee. All of their data from Syria is gone because their identity from Syria is gone because they tore up their passport, because if they got caught with their passport, they were going to get killed. That's the reason they fled as a refugee. They can do all this work inside the refugee camp with UNHCR and USAID and UKAID, And the moment they go to the first MFI, they're coming and they're like, you have zero financial history. Even though World Food Program and others and Kiva partners do give loans in refugee camps, none of that data makes it. So they're starting from scratch at the MFI level. Okay, fine. At least you're now working with a microfinance institution. You have a small amount of credit. The real challenge is actually the next step up the rung, is going from an MFI and mobile money up to a credit union or a bank. And there's an example I like to use of this woman in Kenya who's been a Kiva borrower since we started. So for 13 years, and I'm just using data from 10 years, over a 10-year period, she borrowed $25,000. And these are in little $300 to $500 loans, and has a perfect repayment rate. And she was using this, she started out, she was gonna buy a cow and sell the milk, and then eventually she bought 2 cows and she started having a little bit of farm. She was able to buy, with cash, she saved up in cash, she bought a little parcel of land next to her farm, which is on the main drag in the little village she lives in outside of Nairobi in Kenya. She wanted to go get a loan to build retail space on the first floor for a couple of just shops, and then put two levels of apartments above it. This is not expensive. She needed a $25,000 loan. That's not the type of loan that microfinance institutions or banks give. That's the type that, microfinance or mobile money gives. That's more credit unions, regional banks, and national banks. She went there with a printout of all of her Kiva loan history of like, hey, I've taken out $25,000, I have perfect repayment history, this is over 10 years, like, I'm a great customer. And the bank said, we can't give you any money. Like, you have zero credit history. This is the systemic problem that Kiva wants to solve, is that all this data that exists today doesn't allow you to move one step up the rung. And so these people are systemically blocked from moving up. And likewise, the capital is systemically blocked from moving down. That we have trillions of dollars at these international banks. Some of that can be applied to national banks. But if the data of the people doesn't come up, and they need that data for the money to move down, you're kind of at a stalemate. And so the future we're looking for is federated data. Like, we're looking for a future where we can start from where these people are today, which is they have these basic informal economic products and services. How do we leverage that to get to a spot where the data moves and the people can move up the chain? And really, at the end of the day, what this ends up really being about is where the money is being able to get to where the people are. We're not going to see these people become customers of HSBC in 5 years, but I think we have a chance, if we do the data side right, for HSBC to say, hey, as soon as Rwanda would be able to take in and absorb $100 million of money to deploy to these types of customers, if you give me the ability to underwrite it, to price the risk, to be compliant, then as soon as you get to where I can deploy, maybe their minimum threshold is 100 million, we will deploy it. All you're waiting for is for the data to build up. Like, if you just wait and wait and wait, and you can federate this data, this person's MFI data, the $25,000 that this woman was doing in Kenya over the past 10 years, that suddenly is worth something, can help her move up and get a bigger loan. And so coming back to this, and this was a weird realization for us, is that really what it comes back to is identity. That what's blocking our ability to tie these data streams together, to tie together her MFI transactions, and I took off the refugee stuff because I needed to put a headshot there. What's blocking our ability to tie it together is not that it's in unique databases. What's blocking it is that me with one MFI and me with another MFI are two totally unique people when you're trying to stitch the data together. And so we need a unique global identifier to be able to tie these together. If you do that, then you can stitch together all of these tiny credit histories and say, now I have a complete credit history, and the file is thick enough to actually generate whatever our version of a FICO score would be in the developing world. Cool, so Elon Musk, go solve the first two. Let's get a system to solve the second two, and then we're talking about is just about letting the system do what it wants. I'll take questions right at the end. Give me just a minute and I'll answer that. I'm gonna zoom through these to make sure I have time for these questions, but we came almost by accident to using decentralized ledgers and decentralized stuff. That we are not experts in it, we're experts in financial inclusion in the 85 countries we work in. But we're finally at a spot now, and this is not necessarily new tech, we're just all seeing the utility of it pretty new. But what's great about decentralized identifiers, and if you haven't looked at it, you should look at Hyperledger Indy because of its implementation of decentralized identifiers, or you should look at W3C and the World Wide Web Consortium and what they're doing to define these standards. What's really neat about this is that we don't have to go back to all of these people and say, here's the globally unique ID for Matt, and you all have to use this ID. Decentralized identifiers give me, Matt, the ability to hold a wallet of these DIDs and to keep using proprietary IDs with each person I interact with. But I'm now using a system that allows me to prove that all of those Matts are actually the same person. And so if I keep on doing all my stuff with my MFIs and with UNHCR as a refugee, at whatever point I get an identity from the government that could pass a KYC check that makes it so Bank of America could give me a loan, by design, all of my data that was informal before becomes formal. Because I can prove that even though back then when I was generating the data, I didn't have a compliant identity for Bank of America, I can prove that all the identities I was using are actually the same person as this new KYC one I just got. And so we don't have to wait for this magical event where smartphones get to everybody and everybody can be self-sovereign with ID and all the governments of the world are participating to actually start creating valuable data streams for human beings. Super powerful what this does. And when we think about this as two problems, we think about the identity piece and the credit piece separately, because if we gave identity that was only usable for credit, that's pretty narrow-minded of us. But giving identity where we're tying credit to it, but that then they could use this identity for anything else, super valuable. And the analogy I like to make is your driver's license, that I can use it to prove that I'm 21. That's not why the DMV gave it to me. The DMV gave it to me to say Matt can legally drive. But there's a whole bunch of other utility that identity has, and it's only valuable to me because DMV gave me this card that I can use without them, and someone chooses to trust that. And that's exactly what this system does. And then this gets to be very busy, but I should point out there's no decentralized ledger in identity. There's a decentralized ledger, I shouldn't say no. Making the system work doesn't need a ledger. You end up with a ledger of people who are issuing identities attesting to who they are on the ledger, but actually the data flow here is just verifiable credentials moving back and forth of me being able to pass you data that you can trust. And that last part was Indy. On this part, we're using Hyperledger Fabric. This is where we need verifiable credentials. We need each of those banks and MFIs to be able to issue some type of standardized data format. And then what's different than identity, with identity, you say, Matt, here's the identity I trust. And I can either produce it from you out of my data wallet or I can't. And if I can't, you don't care what else I have in there because you're not going to trust it. With credit history, I need to make sure that I'm seeing your entire credit history before I give you a loan. And this is where decentralized ledgers and why we're really happy with all the stuff that's happened in permissionless networks to get people thinking about this is really, really important. Because this is the way that Bank of America eventually can trust that I haven't altered if there was a default 10 years ago or if I did make all my repayments. That a decentralized ledger and cryptography is what allows 10 years down the line someone to trust data from a source they wouldn't want to trust. And so that overused phrase of trust in a trustless environment, that's exactly what this gives us. So the center part is just, there's one ledger where I would put all of my credit data or where I will put all of my credit data. Everything else is just verifiable credentials. Like you're using the ledger to be like, this is all of Matt's credit data and he hasn't messed with it. But everything else just looks like verifiable credentials. I've talked a lot about this, but what this really empowers, and this is where we ended up at Decentralized, it empowers interoperable identities. Keep using proprietary identifiers with each person. Just make sure those proprietary identifiers are tied into a system that eventually can stitch them together. And that's what decentralized identifiers do. Giving the ability to trust data from other entities that you don't have to trust the entity itself. So instead of us having to go out and say, trust Kiva, or trust, if we built our version of Equifax, trust Kiva Fax because we're gonna make sure all the data's there. We're saying don't trust anybody. Just trust that this is all of the data and it hasn't been altered, because that's actually what you need to trust. Really important, and this doesn't work in a centralized system where you need to have a round-trip API call every time you want to trust the data. The ability to work offline is incredibly important, because we do believe internet access will get there, but right now the woman driving out with her scooter with the notebook, she was probably out of cell service, even with how fast it's expanding. What's really neat about cryptography, and I won't hammer on this, but when there's a cryptographic signature, you know who gave that signature and that it can't be forged. And if I control that identity, I can make that signature offline. And so literally, as long as I take my identity offline with me and you take yours, we can generate a credit file about I loaned you $10 or you made a $10 repayment, and we can do that all securely offline. And it eventually does need to get broadcast back online. But for that woman then, she could show up in town with a tablet that has everybody's encrypted ID or access to it on the tablet, and they can all thumbprint in or access via whatever access mechanism and generate this data offline. And when she gets back to town, it broadcasts back to the network. Near free, it just gets hard when you talk about 1.7 billion people to understand how server costs work at scale. But decentralizing the data kind of puts the onus on each person. And when you're talking about bytes or maybe kilobytes of data total, that is not expensive when you're thinking about an era with massive smartphone penetration. So if we can do all that stuff, then it's a matter of time before funds will flow to the unbanked world. And I haven't talked at all about specifically what Kiva is going to do, because I don't want to get into that too much, but I'll tell you exactly what we're doing right now. We're working with the government of Sierra Leone, a small West African country of 7 million people, and with UN Capital Development Fund and United Nations Development Program. All the stuff I've been talking about, we're actually implementing that on the ground right now in Sierra Leone. And over the course of 2019, their entire financial sector will become run on top of this decentralized ledger for credit and identity. They have government identity, they have 5.1 million, it's every adult in the country, they have digital IDs. They're gonna issue all those IDs into this indie system we're building. There's gonna be applications on top of it for banks and MFIs to access it and for human beings to access it and use it. We're rebuilding their central bank's credit bureau, the only credit bureau in the country, which today is an Excel spreadsheet, not joking, like actual Excel spreadsheet. I think it's Excel 2007. We're going to rebuild the entire thing on top of this Hyperledger Fabric implementation, so that over the course of 2019, we spend the first half of the year bootstrapping the technology and infrastructure for them, and on the second half, we work with them to help onboard every financial institution in the country, banks and MFIs, which is only like 28 entities, it's not that big, but to get to where we can prove this flow of funds, so that in 2020, we can have a system running. And this is what we really want to prove. Like at Kiva, everything else is technology to help enable this last piece. If we can get and start scaling flow of funds to the world's unbanked, this is what unlocks human potential. The other thing that's going to happen is, as we do it in Sierra Leone, and hopefully we and others can do it in a bunch of places around the world, once you get identity in place, you can start hanging a whole bunch of other utility off of it. So you can hang education, healthcare, insurance, physical assets, voting records. All of these things work as soon as someone has a verifiable identity. So we hope to see, not us, like we're not planning on implementing any of this, but we hope that once we have the use case that gets identity in people's hands and they have and are using a digital ID, that whether it's the government or other partners come in and build a bunch of these other things in the developing world. And I like to end on this one before I get to questions. Like the reason we're doing all of this, for that flow of funds, this is a great example. This woman opened her shop. She was struggling because she didn't have enough inventory and couldn't get credit. She got a Kiva loan. She now has 4 shops. That's her granddaughter. Her granddaughter goes to school because she had access to those loans. If she did not have access to those loans, her first stand would have gone under. She would not have 4 stands today, and she would not have money to fund her granddaughter going to elementary school. This is the reason it's important for us to go to the developing world. All right. So I'm going to take, I'll take as many questions as I can fit.
Have you ever heard of tagging? Because they're already looking into sovereign identities for refugees specific, and they've already run pilots in other places in Syria.
Yep. So, and what was the name of the technology?
Tagging. And they already have also partnered with sovereign, but I think they're already more ahead with practical solution.
Okay. We were pretty narrow in terms of, we looked across all 85. So the question was, if I looked at, is it Titan?
Sorry?
What was the name of the technology, Titan?
T-Y-K-N.
Okay. Yeah. We looked across every technology and hoped not to build this technology ourselves. Kiva is a technology company for financial inclusion, but we're not an identity company. The reason we ended up back at Hyperledger, and we're very close with the folks at Sovereign, which they're doing most of the Hyperledger indie maintenance, is that we wanted 2 things. We wanted completely open source for the technology, because if we don't have open source, someone is in the critical path of implementation, because people can't just pick it up and run with it. And the second thing was the interoperability. And so we did look at a bunch of decentralized identity things that were out there, but most of them don't conform to the W3C standards of how to do decentralized identifiers and verifiable credentials. And those will work, but for us, when we're talking about scaling to 1.7 billion people, we need everything to be interoperable. And so we leaned towards what is the system that's going to be open source and will play nice in terms of data with everybody else down the road. We're rolling our own on top of Indy, but it's not much, it's almost no modifications on top of vanilla Indy. Yeah. Yeah.
I can see a lot of data flow, and this data is really valuable because it comes from emerging economies.
Yep.
So I was wondering if you are considering to add a layer of data property to your users, because obviously, like, they could not only benefit from the advantage of getting a loan, getting verified, but they could also benefit from passive income from their data.
Yep. So when we look at, and this is the stuff why we starting with one country that's as small as Sierra Leone that has 5.1 million adults. We want identity to be free, and identity we think of as a basic human right and just needs to be free, because even a penny for an identity check is too much when I might want to verify my identity 50 times a day for the things that I do. On the pricing side for the credit.
No, sorry, I meant data property for the user.
Yep. So what I was saying, I was actually trying to get to that, was all the data here, my data as a user of the system, my credit data is only encrypted and decrypted by me. So I own that and I choose when it's decrypted. When we think about how is credit data priced, like how does money flow and how do I derive value, and I'm just gonna use money or fiat for value, it's really when someone wants to read my credit file, then it's worthwhile to pay. And so that's what makes it valuable for me to maintain my identity, is that when I go to do a financial product or service, someone's gonna need my identity to unlock my credit. Now, then extend that one step further. Let's say it was 10 cents for a credit check in Sierra Leone. My hope is that the person who owns the data about themselves decides to add a markup to use their data. So literally, not just passively, but actively monetizing their data. Like, oh, you want to do a credit check of me? That's great. Like, I have set my default that you're going to pay me 2 cents to do a credit check of me. Now, that's a little recursive or reflexive because they'll just add that price into the cost of my loan, but it's really important that the user is in control of that. And beyond just saying yes or no, saying yes and here's the cost that you're going to pay me. And the same goes for the banks or MFIs. I think we'll see a system where they say, I'm reporting this data, but if you want to verify it with me, it's going to cost you half a penny or 5 cents. And that's their right. One back there, yeah, way back there.
Hi.
Yep.
So before I ask my question, I just give a brief background as well. I'm a programmer and I used to work in the microfinance industry. I used to write a program for microfinance institutions in India. This was 6 years ago when the European microfinance went down. And that went down because MFIs got greedy and there was predatory lending, and the government stepped in and said it's okay for people not to pay that loans. Now, this whole system that you expect, is that what? Have you taken into account the fact that people will realize a good credit history will allow them to get a loan? Okay. Now, there will come institutions who will promise people, hey, we will give you a good credit history so that you can get a loan. And like, have you thought about this of bad players coming into the picture and giving good, like, they will give small loans, like I just give out the loan and he gives me back the interest as well, and that will be my fee, and I give you a good credit history.
Yep.
So, where have you thought of the?
Yeah, maybe can I divide? I'm going to divide this into two questions. So one is there's been a fundamental problem, and this led to the MFI meltdown that happened like 5 or 7 years ago. Was basically regulators were all over the banks and were not touching the more informal sector at all. And so what happened is, as they started forcing credit reporting for banks, all of the defaults just went down to the MFI level, and these MFIs got crushed. That's one problem, and that's where if you can have a decentralized system, everybody can be subject to the same regulations. That it's nominal then for the government to say, if they're reporting, I can mandate, if there's a system they can afford to report to and they can report to, now I can enforce they have to report, and I can take away that regulatory risk. The second one, bad actors in the system, and this is a very good reason to use decentralization and decentralizing trust. A central authority. If we built Kiva Fax, our version of Equifax, the implicit and explicit expectation is you're now trusting that we have all of the data. Decentralization allows the inspector or the verifier, it now allows the new lender to know they're seeing all of the data and then to choose which data they want to use. So the JP Morgan Chase example, using the two extremes, they need to know that they have your entire credit history. But they're probably still going to choose to say, of all the MFIs in Sierra Leone, I only trust these 3. And so I'm just going to, I'm glad that I know that you're not omitting any defaults here, and it's great that you have all this perfect repayment, but I'm still, it's my choice what I want to trust or not. And that's really, really important, because anything else forces people to trust someone. And we want to have a system where you know it's all there and you can trust the data, but then you choose what data to trust. And so that's that bad actor example. What would happen is, would a couple of banks get duped? Maybe, but eventually what's going to happen is everybody's going to know that that person is just creating these fraudulent credit files for people, and they're going to say, that's great that you have his data in your file, but that doesn't count. And I still want that in your file, because now I'm going to mark you down knowing that you're doing this.
Yeah, I'm curious, sorry, Nate Cooper from the International Red Cross.
Yeah.
So curious to learn a little bit more about the Sierra Leone project and whether that's being run using the sovereign network. You mentioned India a few times.
Yep.
Is it being run using the sovereign network and that governance structure, or is the country setting up their own?
Yep. So great question. So we're setting up our own implementation of Indy. That looks very much like the sovereign trust framework. And I work very closely with the guys at Sovereign. We would love to be working closer with them. We're a very bad customer for someone like Sovereign, because we have immediate demands for things to happen in country, and it's like we would just be unreasonable customers for them. So we're planning to stay interoperable with them, and the hope is not just Sovereign. Our hope is that as things expand, that all of these identity networks can really just interoperate with each other, and whether they all swallow each other up and become one global open source, here is open source decentralized identity or not. We hope that's the case, but we just want to make sure at least we're interoperable. So we're rolling our own Indy, primarily because talking to Nathan and team at Sovereign, it became very apparent very quickly, we just have these immediate needs that it's unreasonable to ask you guys to drop your product roadmap and to get these things implemented so we can go. Specifically in country, we're setting it up. The government of Sierra Leone will own some part of it long term, we want them running nodes in the network, but also we're working with UNCDF and UNDP and 15 other relief agencies that are in country to have all of us participating in the network in country so that we have a truly decentralized one in country. Then we'll set up a second one in a second country. Eventually those will start colliding and interacting. Yeah.
Let's say we do nail down a decentralized identity network and we have a truly federated data flow. Looking at kind of the financial aspects of it now, how does this change the risk profiles of individuals as well as change the trust model so that you can actually get that flow of funds?
Yep.
And how do we expect that to change?
Yep. So part of this is a wait and see that this will take time, and it just takes time for quantity of data and for quality of data to move up so people will trust it. What it really comes down to is the trust model in decentralized. If you do it with decentralized identifier, it's all about who's being asked to trust something decides what they will trust. And so by design, making sure that that is the way this system sets up, then so to trust the data, you can trust the integrity of the data without trusting the issuer of that data. So that's one thing. You can say, I know this hasn't been changed, and then to the point before, now I can decide who in the system I want to trust because I know that I can trust the data. That doesn't exist today. And I guess everything else comes down to over time. That look, today, when we implement, we're not going to go write a bunch of historical data because you shouldn't do that. You shouldn't take historical data and say that it now goes onto an immutable ledger because you have to trust I didn't mess with it over time. So it's just going to take 2 or 3 years. This is why we don't have a pricing model up front. This is why we're not issuing any tokens in this system. This is why when we talk about integrating with Sovereign, I'm like, hopefully it's a wait and see. That this just needs time to get up to scale so we see how it actually works. We have our theory of change. We've run this against a bunch of internal data to say, yes, this would be interesting. What it really comes down to is how long does it take for there to be enough data for the first of the big banks to start using this? For JP Morgan Chase to say, my hurdle's $50 million. Which country are you going to get to $50 million in $50 million of loan volume that I could fund in? And then what are my requirements for that? And then it's a matter of how long until the system can do that. I saw there's one more up here.
So we are working a little bit in the identity space from a different perspective. But I mentioned in the previous session, the panel, that I think key to everything is putting the entire ecosystem, not just providing the infrastructure to like create the IDs in the first place, but you also need to do the full chain from like mobile app to whatever to get everybody in, right? It's really an amazing project and I would like to know more about it.
Yeah, one thing I'll say that's nice for those who aren't in the developing world to understand is that when you go to the developing world, one of the nice things is you say, here's the technology, and then how is this going to grow? The government is going to mandate this to happen. That this is not going and saying, MFIs are going to want to use this in Sierra Leone. This is the Minister of Finance and the Governor of the Central Bank are rewriting the credit reporting rules to force everybody being like, we will revoke your charter if you don't use this system. And that's not how most people think about decentralized ledger stuff. And the technology has nothing to do with that compliance angle. But that compliance angle in the unbanked world is really interesting and a good reason to think about going there, even if you don't care about the developing world. Is that if you look at your risks, your adoption risk is almost zero once you can get adoption sorted out, which is not easy. It takes a lot of hand-holding and a lot of biz dev work and working with these UN agencies. But that's one of the best things about the developing world is that why do we know we can get 5.1 million people using this in Sierra Leone? Because the government is mandating it. Like this is what the law is. This is how their ID agency works. This is how their credit bureau works. I'll take yours as a softball, then I'm done.
In terms of the history, you could add that to the, to boot the system. But of course, you tag it with saying this is, history.
Yeah.
So it could then add, in the same manner that any data would add to the value of the system.
Yep.
So then you would have, some kind of an auditing, something that says, okay, I reviewed this data and it was okay. All data points, but the user, the verifier could choose to trust it or not.
Totally. Yeah, we could do that. The main reason I don't is that I think Brian and Dave here at Hyperledger would just cut my head off if I did that, because it would be breaking some core protocol stuff. The other reason, so the primary reason is we're trying to make sure that we're not trying to build an advantage for Kiva here. And if we took our historical data and started bootstrapping the system with historical data, that's building an advantage for Kiva, and we don't want that. We want to be able to deploy more capital, but we're not building this system for us. We're building the system because we need it to exist, and because it turns out that some of the larger grant writers will write us grant funding to go make it exist. And so we'll go do it because we're in that unique position. But I do think, so we could do it. The other reason is, fast forward 3 years, any historical data we write should be dwarfed by the amount of new data generated. So I am currently vehemently opposed to writing historical data into a ledger, but you are correct that you could do it and just flag it and say, hey, just so you know, this was written after the fact. All right, I'll take, this is the last one, then I'm gonna cut it off because I'm way over here.
Yeah, on the Sierra Leone project, just curious, these different actors that you like, the MFI, credit union, the government, are they all going to be setting up nodes?
Yeah, so, we're doing a very heavy-handed implementation where we're bringing the capacity and we're gonna help them set up the nodes, but then we're gonna hand off everything to them. So over the 2 years or 3 years that we're gonna be in country, we're brute forcing and bringing everything. They don't have the technical capacity to do this. But yes, every single one of them, anybody who is issuing an identity or is issuing a credit claim will by design be set up as a node. They don't have to be. Longer term, they don't have to be. They could just broadcast and let the network do what the network does. But since we're doing this implementation and we have the grant funding to come in and be pretty heavy-handed, it's the best way to make it work. And so we literally, with the central bank, we're like, we're gonna come in, we're gonna build this, we're gonna help you hire the people and build the capacity for you guys to run yourselves as a node and as an issuer and as a validator. And then over 2 to 3 years, we'll kind of fade into the background so you're running it. Eventually we wanna make it so that as it's open sourced, anybody can pick it up and anybody can do it, and that banks and MFIs don't have to necessarily be nodes, but the cost is so nominal here to do that.
What's the high-level timeline on this project?
You'll see a lot more about it as we go into 2019. So we're just now bootstrapping the team in Freetown. I'm actually leaving later today to head there. You'll start seeing more about it in the second half of 2019. The first half is really going to be about building the technical infrastructure and getting the identity and credit data flowing. And the second half of 2019 is when we're planning to actually physically hook up all the banks and MFIs to be using this system. And so we haven't been loud about this because then people are like, why is, what are you giving Bitcoin to people? And those are just questions that that are kind of non-relevant for us, but also a spotlight we don't need. So I think second half of next year, you'll start seeing a lot more about it because we'll have actual track record. It'll be like, oh, average loan size went up, default risk went down. And go down that list. Perfect. Thank you all, and I'll be gone and then back Friday. So if you don't see me today, catch me later this week.